and welcome to ABC Bullion's 360 Weekly Wrap. My name's Bron Sachecki. I'm joined by Nick Frappel, Global General Manager at ABC Bullion. Welcome, Nick.
Hello, Bron.
We saw the resolution to the tightening that we were talking about in the last couple of weeks, not to the side that we wanted it to resolve to, but where do you see it now? What the key issues, where's the support?
Well, I think there's a band of support, 1823 to about 1838, that level. And the reason why I think that is because you've got three things that come together. You've got the weekly standard line below the turning line. You've got the 38.2% fib retracement of the whole March-August move, massive move. And then you've got the 61.8 retracement of the June-August move. And all of those things are lying fairly close together.
It's sort of converging, so really solid.
Yeah, there's a sort of band there that I think that, gold could, quite easily move to and then quite easily, find support there.
Yep.
The interesting thing was last week, we'd always been talking about the weekly turning line being an important level. Last week opened right below it and then $90 plunge.
Right.
So that was important. Talking about where resistance might be, just talking short term, maybe intra-week, for example, 1890, 1911, that's where I kind of see if the price makes a rally, then I'd expect some difficulty there.
Yep. Yeah. I mean, we've seen at ABC Bullion on those big drop downs, some clients selling on that, but it's not really sort of, I suppose, fear selling, because there's been a lot of clients that on our Gold Saver program have been accumulating gold over a bit of time. We're obviously seeing that prices weaken. They're in profit, and obviously probably in COVID times they need the money, so they're taking out at the moment.
That sounds quite reasonable.
Yeah.
And then perhaps pausing to reconsider, look at what the market does next, I guess.
Yeah. What about silver? It ratio moved up. It obviously, the old sort of thing where silver is a leveraged example on gold. So.
Yes, yeah, so slightly worse performance. What's interesting is that more money or more silver flowed out of the silver ETF in total, whereas gold stayed more or less the same, or slightly added. We saw about 9 million ounces, I think, outflow on the managed money futures. Not really huge, but the point is that community is also sort of lightening up.
Yeah.
A little bit of shorts adding as well, perhaps not surprisingly. What we did see was the price, when it did plunge, it went straight down to the weekly standard line on the Ichimoku clouds, touched it, and then pretty good rebound. I don't know how that's going to resolve during this week, but it's actually quite a clear rebound off that level. So that was technically positive. And of course, it's still in a positive trend, even though it's come off sharply.
Yeah. I mean, interesting, we talk about the Australian dollar now, but I noticed obviously the US move's been large, but the Australian gold price has sort of really still reasonably decent.
It's been protected by the Aussie.
I know that was leading into the question then, so what's the key for the Aussie here going forward?
It's still a dollar index, broad-based strength in a dollar index move, and I don't know whether it was last week or the week before, but we were talking about, what would the dollar index do most likely, and I think 95, 96 is where I'd expect it to go. Partly because I think there's a couple of things going on. The dollar index just got oversold, so it's rebounding against that oversold position. Doesn't mean it can't get weaker in the future, it's just that this is part of that cycle. The other thing is that post Jackson Hole, when there's the whole sort of Fed new policy and all of that, that doesn't seem to have really translated much into asset markets. So, for example, bond yields have not really moved. They've moved, maybe on the day or shortly afterwards, but bond yields have pretty much stayed where they were. Other sort of indicators haven't really changed much, and I think the response was maybe okay. Buy the sort of sell the rumor, buy the fact kind of thing, and that caused a rebound in the dollar, and that's obviously translated into
the Aussie,
and gold and so on. Aussie should have support at 67, but it's kind of funny. I was sort of expecting the Aussie to weaken a little bit earlier than this, and obviously it went for a month or so where it didn't. I think. Look, it's really at the moment a dollar-based move, a US dollar-based move, rather than something that's explicitly negative. Of course, at the same time, there is this talk about the RBA easing again, and in what form that easing will take. I don't know whether it's going to happen in October or November, but there's a high expectation that the RBA will ease, that should be dollar weak.
Dollar weak, yeah.
There has been some talk about how the RBA chooses to support the economy. For example, if they go down the buying mortgage-backed securities route, and there has been some talk about that being a little bit negative for the Aussie in the longer term. I'm not sure that's the longer term.
All right, thanks, Nick. Stay in touch with the markets by following us on our social channels or at abcbullion.com. Until next time.
Thank you.